Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with new supply chain cost pressures seen to be easing now. But first, US mortgage applications fell again last week and are now 23% lower than year-ago levels. Benchmark mortgage interest rates rose back to 5.8%, which puts them back to their highest since 2008. The American housing market is in the doldrums, undermined by those rising rates. On Saturday, New Zealand time, we get the next American jobs report, and today we got the ADP precursor employment report. It has been tracking the non-farm payrolls quite well in its revised format, but they say the era of supercharged job gains may be over. And the ISM Chicago PMI for August in this heartland manufacturing region has the moderate expansion rolling on, even if not quite as hot as it has been. But new order levels are up and order backlogs are growing in their region, they say. They also say jobs are now easier to hire for. And the official measure of Chinese factory activity contracted for a second straight month and the fifth decline in the past 6 months. These signs of weakness are building up now. Meanwhile, the official Chinese service sector PMI is still expanding, but at a slower pace. They can take some heart from that expansion, even if it is their slowest in 3 months. And it is not only the Chinese property market that is causing company pain, their airlines are reporting deep losses as well. In India, they said their economy expanded 13.5% in the second quarter of 2022 from the same quarter a year ago, the most in a year, but less than the expected 15% gain. It is actually a remarkable spurt for the world's sixth largest economy. And the EU said its CPI inflation rate was 9.1% across the zone in August, a small rise from an already high level. They also said their core inflation rate was 4.3%, however, but food prices were up more than 10% in August from year-ago levels. In Australia, house prices took their biggest fall in 40 years in August, down 4.7% from year-ago levels. Prices in Sydney led the way down. Internationally, container shipping costs are falling faster now, down 4% last week alone, down 40% in a year, although they're still well above 5-year averages. Freight rates for bulk cargoes are falling fast now too, and are now lower than pre-pandemic levels. The extreme cost pressures surrounding international supply chains are easing quickly now. And the US Treasury 10-year yield starts today at 3.14% and up 2 basis points from this time yesterday. And the price of gold will open today at $1,714 an ounce, down $10 from this time yesterday. And oil prices start today at $1.50 lower, at just on $90 a barrel in the US, while the international Brent price is now just under $96 a barrel. And the Kiwi dollar will open today at 61.2 US cents, and little change from this time yesterday. Against the Australian dollar, we're still down at 89.4 Australian cents. Against the euro, we're down to 61 euro cents. That all means our trade-weighted index starts today at 70.5 and another small retreat. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.